Hello, this is Brian Shannon from Alpha Trends Blogspot. It is Thursday, the 8th of February, March 2007, and the market's closed. Let's take a look at the NASDAQ on the screen right now. This is the NASDAQ 100 Trust, the Qs, and they finished up today, up 29 cents, but red candle indicates that they actually closed lower than where they opened. So we had another gap higher today, and that gap failed to hold. It's just, a pretty frustrating market, and I'm still going to repeat myself by saying that for now it seems as though cash is the best position for most people. If we take a look at the intraday time frame, let's look at this 10-minute, these 10-minute candles in here over the last 10 days. You see that I was kind of expecting or thinking that they might hold up and then be able to add to this rally a little bit, but it just showed how feeble this market is right now, and it failed, but it's still got this little pattern of higher highs and higher lows until I guess it takes out this level for now. So we've got this 5-day moving average starting to flatten out a little bit. Perhaps it's in a position where it could rally from. We've got yesterday afternoon's highs, that $43 level, acting as support a little bit as well. And I'm just looking at the market in the after hours. It's trading at about 43.04. I don't know if there was some kind of news or what, but looking at the half-hour chart, you can see that level a little bit more clearly, and that's about a little below 43, obviously. But here we see on the daily time frame, this is where we are. So we're above these lows right in here, and I was hoping or indicating yesterday I thought maybe we could get up to this level, 43.40 or so, and then fail. So on the short-term time frame, it's looking a little bit more bullish in here now, but because the primary trend is lower, I wouldn't really trust any rally attempt in here. We've got mixed message from the market. That is that we're in a downtrend on the daily time frame, and on this 10-minute time frame, we're in a slight uptrend that just seems to be grudgingly moving higher. It doesn't really seem like the buyers are all that convinced in here. And definitely the people who bought after that early gap, not many of them, if any of them, made money today, as you can see here in the 2-minute time frame, how that failed. It came down on increasing volume, and we saw a subsequent rally on light volume. So relative to the event, which is the breakdown here, the volume was lighter in there. So that means that the buyers weren't very convinced, and you should have expected or looked for another attempt to pull back. So we saw that early on, R2 did act as support for a little bit. It then broke, and that's when things really kind of got ugly for the market. It also broke below that daily VWAP, and the VWAP started declining as well. So I continue to say that the market remains a mess in here right now. We're looking at the spiders, looking at about 140.5 as potential resistance level, and we got right up to there, closed right above it. We've got this level here now, looking like it's acting as resistance. And you've got, again, you've got that 10-day moving average, which is declining. Early on in a downtrend, a 10-day moving average often acts as support. It doesn't mean it, resistance rather. It doesn't mean it will, but we're coming up there on diminishing volume, so the buyers aren't that aggressive. They're losing their conviction. Looking at a shorter-term time frame, though, you can see that it's rallied a couple days in here since breaking past this little 139.5 level. And now it looks like it's getting a little bit tired in here, but we do still have this moving average heading higher, so more neutral than anything. There's just really not much edge in here besides getting involved for intraday trades. Just it's a day trading market right now, so that's where you ought to be focusing your attentions, I think. The mid caps continue to rally a little bit here. They are again past this prior level of resistance, which tried to act as support. We had the shakeout, but it's again diminishing volume in here, rallying up to that declining 10-day moving average. So it's time to be very cautious in here. Looking like it made a lower low. Let's see if it can't take out this high, then perhaps this rally attempt will fail. And again, looking at the semiconductors, we saw a little bit of a breakout past this short-term resistance at 34. And it's looking neutral on this time frame, daily time frame, neutral at best, but still looking pretty ugly. So same thing I'd say out there is we're in a high-risk environment. There aren't any really clear short sale setups yet. for the majority of stocks. We're still bouncing a little bit. Once we undergo a little bit of short-term distribution, I think there's going to be some great opportunities on the short side. And again, those inverse ETFs are a great vehicle. We've got the QID, which this prior resistance looks like it's starting to act as support in here. And on the 10-minute time frame, you can see we're still kind of neutral in here, but things are starting to look like maybe they're stabilizing a bit. So we could have another push higher in the quid, which means that the Qs would be declining.